Thank you for visiting the channel. I have just now finished making a video on Tasi, and now I'm just trying to quickly review DFM as well. Um, let me tell you right in the beginning, and I have my introductory video also I have mentioned it clearly that my objective is to my basis what I have seen, and you may completely disagree with, and you may disagree with whatever I am trying to explain. uh, Objective is to focus on the risk adjusted return. Objective is not to do any kind of heroism in the market where wherein we uh, and like people would claim to make say 200%, 500, sorry, 200 times, 500 times, or even 200% or 500% year on year. That might happen as well. Since I have not experienced it a lot, I would not like to comment on that either. Neither that is my neither that is my objective. As we know, there are different kind of instruments available at our disposal for trading. So different instrument has got different capability. If you trade a simple stock of a company, uh, and you make say 20% risk adjusted during the year, that is fine. But if you trade an instrument like you trade an option where you're trying to fight with the volatility, and you make say 20% risk adjusted, probably that will be um, uh, that will need a lot of review in the approach. But having said that, the question is whether the market gives us an opportunity to trade every day, whether the market gives us an opportunity to trade every setup, whether the market gives us an opportunity to uh, to trade all the time frames. We're not well equipped. Our mind frames are not well equipped. Forget about us. Even the high end algorithms that are being vouched for, they are also not capable either to handle all the time frames. So we'll have to understand the reality, and I'm not here to challenge anybody. I mean, people may agree, maybe may disagree, and that is completely their opinion. This is my view. This is how I am seeing the market. This is how I see the algorithms, because if they would have been so capable of beating all the odds, probably there was no need of many analysts and many traders that we see around the globe. So here the point is that I will not be focusing on a lot of things which are like trading every day, or trading every signal. But we will definitely be focusing when the momentum and volatility both are available in market, and that is the time when if we are not focusing in market during that time, then that is a crime, I would say, if you are a trader. uh, Now the problem what happens basically is, and I have experienced it, that you tend to lose your money during the sideways markets, because markets keep churning your money. You Whether you make money or not, broker, you definitely have to pay the brokerage. So you keep churning your money during the sideways market. So what happens is that you erode your capital during this period. So when momentum and volatility comes in the market, you do not have money actually to take those trades, because what happens is that during those volatile period, the premium that you are to pay is quite high, and that is not available with you, because you have already spent your money during this kind of market. When market is consolidating in very tight range, you keep trading, you do not you, you keep trading your money, and you keep churning your, and this is the weekly chart, so don't worry, I mean, you'll find a lot of trades. So the point is that when the momentum and volatility returns to the market, and it does not return every day, every week, Depending upon the time frame, you'll see momentum and volatility both. But when you see volatility shrinking on a higher time frame, like say probably a weekly chart, you have got all the reasons to get worried about many things of many things about the market. So here on this channel, how things are going to be shaped up is that you will not get trade every day, you will not get very frequent trades and all. So because see what happens is basically that markets are consolidating for a reason, and when markets are breaking, those are breaking for a reason. uh, During this recent market crash, you can see all of the news channels, all of the business channels, and you'll find that most of the analysts or the fund managers would come and they'll say that nobody knows what is happening, and when it will end. I do not know. I do not know when it will end, but market will show you before many people that this is about to end, or market had shown you before many of those stalwarts, or before the market has started getting into extremely volatile zone, much before what others might have anticipated. Think why prices, when people say that you have to focus on the value investment, and honestly I do not know anything about value investment, neither I have got any exposure or anything. But here the point is that when markets are crashing, and you say and you see the some of the blue chip stocks are correcting by say 30% or 40%, even 50%, at least during this downfall. Now think what happened to those companies. People say that you have to focus on the high P ratios, PV ratios, that is look at look at earnings, look at profitability, look at look at the competition, do the Michael Porter's competitive advantage analysis, etc., etc., etc. What happened to those blue chip companies, that they started dropping so heavily, so quickly, and nobody anticipated? And there are many people whose portfolio, significant part of their portfolios, have blown. And you can, I mean, of course, Corona is, of course, talk of the town, and I pray that God keeps everyone safe, and this problem is getting an amicable solution in the form of the vaccines that scientists are already working on. But from the market perspective, the point is that market gave a lot of signals on which I will not talk, because that is not recorded anywhere. I do not have any evidence, and I do not want to mention where what happened and what was the indication. But I do follow some of the extremely volatile instruments, and I can assure you that there were a couple of strong reasons to be very careful about the market. And be very careful. I mean, I'm not saying that whether it should be from it was a risk, or was he expected to fly. So I mean, yes, but enough indications were available that one should be very careful about the market. Now the point is that when the volatility and momentum comes together, you will find that none of these analysts would be able to comment anything on anything, because that is literally beyond imagination as well. So now on this channel, our focus would be mainly to find the areas where volatility and momentum are coming together, and they are able to, and I do not use any of very complicated algorithms or formulas. Even we can do with the normally available indicators which are available in the market, without putting in any effort on creating any of those. So the question is again, whether what is your expectation out of the market? Because if you see this DFM, you'll see that hardly anybody would have made any money from 2016 probably, by remaining net long position. By keeping net long position, no one would have made anything. Now, once everything is over, it is easy to say that this was kind of head and shoulder and a pattern which achieved its target, and all that shit keeps going on in the market. I mean, like, that is how people are running their shops. But here the point is that unless momentum and volatility will come together, you'll not be able to make any money in the market, and you'll see most of the signals getting failed as well. You see, this is the standard MACD. This is kind of positive signal, but signal is failing. Signal fail. What happened here? You hardly, since this is a weekly chart, so of course you understand that your risk also remains on a higher side. You hardly make much money over here if you have to depend on this in this area. What happened that market could not blow during this period, and you see massive run during this period, and there is no respite, let me tell you, that shows that market will recover. But the question is how much you want to make out of it. 5%, 10%, 15%, 20%, 200%, 500%. So it will totally be depending upon one's risk appetite and the reward appetite. And let me tell you, reward appetite is equally very important. When you see you have made already 2x on your investments, and you cannot digest that, you tend to liquidate and you lose some part of it. But the question is that 2x can become 0 also, and you may have to pay margin call as well if it goes against you drastically. So no one is right, no one is wrong here. The question is what you expect out of the market. That should be clearly determined. It may be 5%, it may be 10% risk adjusted. So my focus would be only on during the time when the volatility and momentum comes into the market together, and when those are not there, it is always beneficial to stay safe in cash. Keep liquidity. People say that they do not keep liquidity. Do you think Warren Buffett is does not want to make money or something? Though I understand that because the business model that he has, he must have some cash remaining sitting always with him, so that he can take care of some of the insurance claims. But the question is that he still holds huge amount of cash. Why is he keeping all that cash available? There must be some reason. I was listening to one of the stalwarts of market. He says that I'm never in cash, and he was regretting it. He was kind of regretting. He did not say I regret, but he was kind of regretting that cash is king right now. And this person very closely follows Warren Buffett, and anchor asked him, Warren is sitting on such a huge cash pile. So here the point is that we do not need to trade every time. I remember one of the interviews Warren was giving to some channel. He says that in a year or two, even if I get one deal, that is more than sufficient for me. I'm not looking for But here the point is that in the investment fraternity, especially like traders and scalpers, average holding period remains to be few minutes to few hours. And this guy talks about holding stock for say 20 years, 25 years and sitting on it. So the approach is entirely different. As I have already mentioned to you, I do not have any capability to make any value investments till today. I'm definitely trying my best to learn something out of it. But anyways, now the question is that whether we had enough opportunity of making money in this DFM general, and the answer is yes. We had enough opportunities on the proven setups which have been right most of the times, and when those are wrong, you have got as I have mentioned to you, risk adjustment is my main objective. So keeping that in mind, you have to decide first how much you expect out of the market, and then we have to design the strategy according to with that thing kept in mind. Now, I do not mean to say that if you define 10% and if such a storm comes into the market, You have no, you don't have say you don't you do not deserve to make 20%. Why not? If you have got setup which is coming in the form of technical, fundamental, and something which is unclear, because markets do not like any uncertainties. So if some events unfold, it can be anything. It can. I do not know what it can be, but we always see that there are storms in market. May not be as severe as we are experiencing now, but there'll be some other storm in market, because people have to, because the funds for collecting money, they have to return it to I mean, people would be investors would expect to capture their profit, book their profit for many obligations. So there'll be storms like this always in the market. Not very severe, but yes, something where you can make your fortune will always be there. So you decide that percentage, which what is it, 10%, 5%, 20%. How much do you want to invest in the very high, very risky instruments, where at the same time probability of gains would also be higher? For example, if you want to remain safe and you want to make say 10% while remaining safe, and you allocate say 20% or 25% of your capital to extremely highly risky instruments, you have got all rights by all means to expect say 50%. And there also you have got options of designing your strategy in which your risk adjusted return, I'm mentioning, even in while trading very high risky instruments also, you have got all rights to focus on the risk adjusted return of say 50%. If you're trying here 15, you try if you're expecting here 15, you expect 50%. So all those things are available, but it will totally depend upon your risk appetite, your reward appetite, etc. Now I'm going to the shorter time frame. I'll just pause this video and I'll go to the shorter time frame. Okay, now see how this chart looks like. You saw the weekly, in which you were seeing, and you see a long period of huge consolidation on weekly, indicating there was almost no possibility of taking any trade. On the daily also, that you don't have much, but still you can. So this is the beauty of time. And I'll go to the even smaller time frames, and you'll see that when, so opportunities are always there. You have to just define what you expect to do. Let me tell you now, many people must have been eyeing at going long, but don't go long for now. You may miss significant portion of the rally if I'm wrong in markets rallies, but you may hear from your conventional analysts saying that there is a bullish divergence taking place in the market, and this is an excellent time to go long for trading. No, this is not the excellent time to do trading from the long side. At least I am not in the favor of doing that, and I will not do that. As I mentioned to you, I am not expecting to beat the market. I want to be as close as possible to the market. I showed you daily chart. First I started weekly, I showed you daily. This is 5 hours chart, and you see how things are shaping up. So every time has a relevance. You have to decide which. So if you are a trader, you have to decide which time frame suits you. It does not have to do anything with your probably work timing. If you're a full-time employee somewhere, it has to do more with the kind of move that you expect out of it. So a signal that will manifest on say weekly chart is of course going to long laster than what is manifesting on say daily chart. I'll show you more. This is 4 hourly, 240 minutes, and I can keep going lower to say a minute or so. Doesn't make any sense to do that. So with that, I will take a leave. Stay safe, and think about what you expect out of the market, and do not be in any hurry to make trade. Think about what you expect from market. That is most important in my view. But this is your money, you have to take care of it. I would say best wishes. And in case if you find any instrument that is that you would expect me to review, to see if there is anything on that, you can mention it to me, because generally I will not be touching all the instruments or uh, all the not all I'll not be touching all the instruments, because the margin requirements in equity is ridiculous. So so I would not be touching on, I'll not be touching uh, on all the equities. But if you expect me to, if you want me to review something for you, I'll be happy to do that. But yes, you'll see a lot of things coming from the commodity space, where you have got option of taking leverage, and even you can take you can trade all other derivative instruments available for your at your disposal. You can review those, or you can do whatever you feel like. But the thing is that unless momentum and volatility shows to be coming together, stay away from the market. That is the only thing that I have for you. Thank you very much for spending your time here with me, and you'll hear very soon if I make a video on any other instrument. Though I'll try to do something on crude today if time allows, because Brent is again on fire because of the tensions that we see in the market. We as a trader, we would like to see whether something is available for us in this market or not. And again, the expectation, the funda is whether there is some trade available for us or not. If it is available, trade. Otherwise, take rest, enjoy your weekend. Take care. Bye.